Hello, everyone. In this video presentation, I'm going to be discussing deferral adjusting journal entries. As you can see in this slide presentation here, we have 4 different types of adjusting journal entries. And there are 2 that are called deferrals and 2 that are called accruals. And in this presentation, we are going to specifically look at prepaid expenses. This is where we originally record an asset, and now that asset is used up, so we have to transfer the amount out of the asset into expense. So what I'd like you to do right now is pause the video, and I want you to write this down. I want you to memorize these journal entries. The reason why it's important is that these journal entries don't change. So when you're doing an AJE related to supplies, it's always going to be debit supplies expense and credit supplies. When you do a prepaid insurance adjusting journal entry, it's always going to be debit insurance expense, credit prepaid insurance. And when you record a truck and you're trying to record the wear and tear of that truck, you're going to debit depreciation expense, credit accumulated depreciation. Now that just went all over your head, right? I mean, but that's okay. I have a separate video just on this. And so you'll get it. For right now, just write it down. And even though that in this video, we're not going to go over the deferral unearned revenue, where we originally record the liability, and then as we earn it, we reduce the liability. This is the journal entry. So write it down, because you will be doing this in the future. Debit, unearned revenue, credit, service revenue. Okay, now I have 2 really good handouts that are in Canvas. One is the types of adjusting entries, deferrals, and the next one is prepaid problems and the 3 types of problems that you'll see on your homework. So here I'm going to give you strategies to complete your homework. Okay, and also then we'll do some quick study application of these. Okay, now I didn't have you print these out, these 2, just because you're poor college students, and you know, when we actually use a handout where you're writing it down, I'll do that. Although I would suggest that if you can, print it out, put it in your notes, because it's really good, and you'll see why. Okay, so let's go ahead and do that. Let's. I'm going to end the show here. And here we go. I think we've got this. You see the deferrals, prepaid expenses. This is where we originally record an asset, and then it's used up. So our supplies and the use of those supplies, it would be a prepaid expense type of AJE, right? So when we originally buy our supplies, we debit the asset supplies, and we of course credit cash. Probably it could be accounts payable, but let's say it's cash. But there we go, we've got an asset. We recorded it as an asset, but at the end of the period, we count our supplies and we realize that we used 100 of those supplies. So our adjusting entry would simply be a credit to supplies and a debit to supplies expense. In other words, we don't have the asset anymore. It's not going to benefit us in the future. Why? We used it up. So we transfer that cost in the supplies account to supplies expense. Now, also in this handout, I'm not going to discuss this, but down below, I also talk about the unearned revenue, and that's the other type of deferral. I'm going to be doing that in next video or so. Okay. Now, there are 3 types of prepaid problems in your homework. Number 1, they're going to give you the amount used or expired. So for instance, they'll say $200 of prepaid insurance has expired. Ding, 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 ding. Game over. You know, there it is. They told you what the expense is. The expired amount is the expense. So then just put it in your journal entry. Debit, insurance expense, credit, prepaid insurance. See how easy that is? And that's how I like to solve these problems. I'm always looking for the amount expired or used up because that is my expense. Now, the other 2 that they're going to make you work a little bit harder. In the second one, you've got to figure out the amount expired using a proportion. For example, 2 months out of the 6-month policy expired. Okay, let's assume that we have a $600 policy. Okay, so there's our policy, $600. Well, how much was used up? 2 out of the 6 months, 2/6, right? So again, it's $200. How do you solve that mathematically? 600 times 2 divided by 6 is 200. Yeah, 2/6 of your policy expired, 2 out of the 6 months. Now, I know what you're thinking. Petra, when I didn't like fractions in grade school, and I don't like them now. So I'm going to give you another way of looking at things. And you can do this if you'd like. We know that we have a $600 policy, right? And it's going to cover us for 6 months. So that means that our policy is going to expire $100 per month. And how do I figure that out? Well, 600 divided by 6 months, that's your $100 a month. Now, we need to record 2 months of expiration. So we just multiply 2 months times 100 to give us our $200. It's the same journal entry. Debit, insurance expense, 200. Credit, prepaid insurance, 200. Okay, the third one is this. They're going to give you a current balance and a needed balance. This is the example. Okay, prepaid insurance is stated at 600, but it should be 400. So in that type of thing, get your T account going. Matter of fact, you have 2 of them, one for insurance expense, one for prepaid insurance, okay? Prepaid insurance is stated at 600. So put it into your prepaid insurance T account, the asset, $600. But it should be 400. That's the unexpired amount, 400. Now, how much did we use? Well, how do we get 600 down to 400? Well, we must have used 200. That's the amount that was expired. So then we transfer that amount out of the asset and into insurance expense. And again, it's simply debit insurance expense, 200, credit prepaid insurance, 200. Okay. Let's go ahead and turn to your textbook, Quick Study 3-5 on page 117. These are going to be applications of what we just discussed. Quick Study 3-5. Now it said, follow the 3-step process for adjusting the prepaid asset account at December 31. And there's a 3-step process. Be honest with you, I don't use it. I didn't learn it that way. I don't think that way. But if you do, please use it. Everybody's different. But this is how I'm going to do it. Okay. So A, prepaid insurance. The prepaid insurance account has a 4,700 debit balance to start the year. A review of the insurance policy shows that 900 of the unexpired insurance remains at year end. So, you know, that third problem solving technique that I showed you, that's what this is. Get your T accounts out, one for insurance expense and one for prepaid insurance. They give you what the prepaid insurance balance is. It's $4,700. Then they say, well, what's left? What's the unused part or the unexpired part, right? That's 900. Okay, so they give you that. Then we have to determine, well, how do you get 4,700 down to 900? Okay, you'd simply go 4,700 minus 900, it would give you 3,800. That's the amount that we used. That is the amount that was expired. So we're taking it out of our prepaid insurance as an asset, right? We're reducing the asset and we're transferring it to the expense, insurance expense of 3,800. So what's the journal entry? Debit insurance expense, 3,800. Credit prepaid insurance, 3,800. Okay. We turn the page here. This is on page 118B. Now we have prepaid insurance. It says the prepaid insurance account has $5,890 debit balance at the start of the year. A review of the policy shows 1,040 of insurance has expired by year end. Ding, 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 ding. Game over, man. It's the easiest one. We don't have to do T accounts or anything. They gave you what the amount that expired, right? And 1,040 expired. So just put it in your journal entry. Debit, insurance expense, credit, prepaid insurance by the 1040. All right, let's do the third one. Now, this is prepaid rent. So you're paying your landlord in advance for rent. And of course, that's going to benefit you in the future, right? It said on September 1 of the current year, the company prepaid $24,000 for 2 years of rent for facilities being occupied that day. And the company debited prepaid rent and credit cash for $2,400. So they debited the asset account, prepaid rent. Okay. So now it's December 31. So how many months were we in the facility, and how much did our prepaid rent expire? Well, we know it's 4 months because September 1 through December 31 is 4 months. Now, some of you guys are going to mess up on your homework because you're going to see, oh, September. Well, September is the 9th month and December is the 12th month. So that must be 3 months. Not so fast. You're trying to compare apples with oranges. This is at the beginning of September. This is at the end of September. If this was like September 30th and this was December 31, it would be 3 months. But it's not. This one's at the beginning of the month. This is at the end of the month. So it's all of September, all of October, all of November, all of December, 4 months. Now, we paid $24,000, for 24 months, right? It was 2 years, and there's of course 2 years times 12 is 24. So how much per month expires? Well, 24,000 divided by 24 months, it expires by $1,000 per month. Okay. And how many months expired? 4. So you take $1,000 times 4 months will give us 4,000. So our adjusting journal entry is debit rent expense, $4,000, credit, prepaid rent, $4,000. Now, I'm going to give you another way of doing this. This is my preferred method, and I like the fraction thing, and I think you might like it too if you get used to it. We know that we prepaid $24,000 for 24 months. So how much did we use? 4 out of the 12 months. 4 out of the 12 months. So basically just go 24,000 times 4 divided by 24 gives you 4,000 a month. Put it in. And see how much easier that is than have to do this two-step process here. You know, find out per month, and then you multiply that by the months. Here, it's just 24,000 times 4 divided by 24. It's the same amount. Okay. All right. Let's move on to quick study 3-6. I like these. I love the supplies adjusting journal entries. I guess I need to get a life if this really excites me, but it kind of does, because it's kind of easy when you set it up this way. When you see a supplies adjusting journal entry, get your T accounts out. Just do it. Get your T accounts out. Make it easy on yourself. You have one T account. You have one T account for supplies expense and one T account for supplies. And then you just put in the numbers. Out pops the answer. It's that easy. So let's try the first one. A, the supplies account has a $300 debit balance to start the year. Put it in. No supplies were purchased during the current year. Good, no, nothing to do there. And then on December 31, a physical count showed 110 of supplies remaining. Well, it remaining is 110. That's the amount that's unused. Okay, well, how much did we use? If we start out with 300, but we only ended up with 110, we must have used 190, right? 300 minus 110 is 190. So what are we doing? Because we used up the supplies, we're crediting our supplies by 190. We're reducing those supplies by 190, and we're transferring that cost over to supplies expense of 190. So like I said before, when it comes to these AJEs, the counts never change. For supplies, it's always going to be debit supplies expense and credit supplies. So just put it in there. Debit supplies expense, 190, credit supplies, 190. All right. Let's do the next one. B. The supplies account has an $800 debit balance to start the year. Okay, put it in. Supplies, 800. Supplies of 2,100 were purchased during the current year and debited to the supplies account. Ooh, that's not hard. Put it in. It's a debit, 2,100. Okay. Now, on December 31, there was a physical count that shows $650 of supplies remaining. So put that 650 in. That's what's remaining. That's what's unused. Well, how much did we use? Well, I made this calculation so you can see this, but basically this 800 plus 2,100 minus the 650 will give us the amount used, which is 2,250. And here it is. There's a calculation. 800 plus 2,100 minus 650 equals 2,250. Now, you can test that if you want, if you don't believe me, or you know what I do is once I do this, I'll test myself to make sure I'm right. I would go 800 plus 2,100 minus 2,250. I should come up with 650. Cool, and I did. Okay, so that's the amount used, and we've got our supplies expense of 2,250. We'll put it in. Debit supplies expense, 2,250. We also have the credit to supplies of 2,250. Credit supplies, $22.50. There it is. There's our adjusted journal entry. All right, just one more. The supplies account has a debit balance to start the year. Okay, a $4,000 debit balance to start the year. Put it in. 4,000. During the current year, supplies of 9,400 were purchased and debited to the supplies account. No problem. Put it in. Okay. Then the inventory of supplies available at December 31 totaled 2,660. Put it in. 2,660. Well, then how much did we use? Again, 4,000 plus 9,400 minus 2,660 should give us 10,740. Right? That's the amount that's used. That's the amount that's been expired. Now, if you want to see what I did here, 4,000 plus 9,400 minus 2,660 equals 10,740. Okay. Now, if you want to test yourself, 4,000 plus 9,400 minus 10,740 equals 2,660. Okay. So what's the journal entry? Okay. Here's our supplies expense. Okay. In fact, maybe I should do this. There we go. So debit supplies expense, 10,740. Supplies expense, 10,740. Credit supplies, 10,740. Supplies, credit, 10,740. Okay. Well, that's going to do it for me for this video. So be looking for the next one, and I'll see you at that time. Talk to you soon. Bye-bye now.